Hi, Lior. Welcome to Inside the Vault. We're very excited to have a young, successful investor with us here today. I look forward to hearing your thoughts.
Yeah, good. Who is he? Okay. So what's going on?
Yeah, Lior, you have a very interesting bio. When I was reading up on you, you've been called a thrill-seeking entrepreneur. You've traveled to over 30 countries in the last decade, seeking investment opportunities. You've been investing since the age of 16 years old, which makes you, at this point, a seasoned veteran. So before we dive into your views on precious metals, what is your approach to investing?
A good question. My father's business went under when I was 13. And that kind of was a lucky break because I was at that age. I wanted, to go out, friends, ladies, and whatnot. And I didn't have any allowance. And it was very tight around the house. So I started babysitting in the neighborhood and, posting flyers and taking calls. And it literally was like the 1997. So it was like the first years of the, like a flip phone. And I had a little thing. And I started babysitting in my neighborhood. And then I upsold the parents into letting me coach basketball to the kids. And by the time I'm 16, I saved about $20,000. And the banker, he's looking at me and he's like, what are you doing? I told him I'm babysitting, I'm painting decks, I'm doing whatever I can. I'm handing out flyers and after school, et cetera, et cetera. He said, you should get your parents to sign a waiver and then you can buy securities as a minor. And because I was always asking, what do you do with the money? Why is it just sitting here? You explain, like you can invest in mutual funds, et cetera, et cetera. My parents came in, signed the waiver, and then I bought books. I bought Peter Lynch books and Warren Buffett books. So I think that marriage between Buffett talking about long-term competitive advantages, companies that can raise prices and not lose market share, not aggravate customers. And Peter Lynch on the flip side, talking about 2,000 stocks in his portfolio, and that the really good ones were given to him by teens, like his daughter and whatnot. And I'm a teen at that age, so I'm thinking this is doable. Mm-hmm. And that's how I started with investing. Luckily, it was 3 months after the dot-com bubble burst, so it was cheap. Compared to what it was just a few months earlier. And that's how I got into investing in general. And then that helped to kind of put most of my attention into how can I compound over the long term? How can I think really in long term? But then as you grow your wealth a little bit, you're starting to think about diversification because you don't want to have 100% in stocks, even though you can be good and whatnot, etc. And you start thinking, is it optimal to be all the time in stocks, or are there better things to do with the allocation? And then you start to look at correlation between asset classes, position sizing, and whatnot. And then you start to realize that if you want to really beat indices, then it really makes sense to have a precious metals position. That came to me when I was about 24, and literally in 2008, in the September meltdown, I am kayaking down the Green River in Colorado with no cell reception for 4 days, sleeping like an adventure trip, sleeping on the riverbed in the tent, making my own food, etc. I'm exiting the river, getting my reception back, and the world melted down in 4 days. And so I learned a big lesson on, man, if I was too overweight in stocks or etc., and that got me thinking about real estate and about precious metals, and I've never looked back. And I love precious metals. My position with precious metals is that I took 2 years worth of my living expenses, or my family unit's living expenses. Let's just for rounding the numbers, let's say it's $10,000 a month in spending. So I took 24 months of that, so $240,000, converted that savings, that purchasing power in fiat currency, into a mix of precious metals between gold and silver. And to me, that says if there's a 2-year depression, if there's something really bad where my life, not only my life, but society has a big problem, everything dries up, there's a shakeout, there's a reset, I have this kind of a start over fund, a duffel bag, if you will, of precious metals that have a lot of purchasing power in today's world, 2 years, but man, in a depression, they can actually rise even in that. So that was my first idea, and that's what I did. And then on top of that, I like to look at different opportunities within the sector. And then came wealthresearchgroup.com, the free financial newsletter in early 2016, because my thought was December 15th, 2015, I believe that when the Fed started to raise rates, that signaled to the markets that they're anticipating some inflation from all of their activities. And it literally marked the bottom for gold. And gold has doubled ever since. So I launched the newsletter in early 2016. We caught a few lucky breaks with precious metals during that year and mining shares, etc. And the newsletter has been running ever since. And that's what we try and focus on: big picture, what am I doing, and then showcase specific opportunities.
Well, let me ask you this. Since you invest in the stock market, you also obviously invest in precious metals. You talked about this 2-year duffel bag. How do you feel about that duffel bag right now? Because we're in a situation where the stock market in certain sectors has been rising, like the tech sector is doing well, but at the same time you have precious metals rising. Whereas in the past, it was always like, well, if stocks are doing well, precious metals is doing poorly. We kind of found ourselves in a situation where both are somewhat attractive. So how what would your advice be to investors who are trying to decide, should I be longer in metals right now, or should I remain in the stock market and try to play out this rally a little bit longer?
Oh, that's a great question. I obviously cannot give personal advice or anything like that, but I can tell you how I feel about everything and what I'm doing with my own money. I think, for one, the indices are very expensive. So if you look at the S&P 500 as an index, it is very expensive. If you look at the NASDAQ 100 as an index, it's expensive, and the Dow Jones is quite expensive as an index. But if you look within the index, you will see that about 300 of the 500 companies that make up the S&P 500 are actually flat or down for the year. And I think about 150 of them, as we do this interview, are in a bear market. In other words, down more than 20% since their top, and some of them 40, 50%, obviously a lot of COVID-19 victims in there. So it's definitely a time for stock pickers and not for index investing. My personal strategy over the years has been, when everything is cheap, I'd rather buy an index because I don't need to dabble in anything. And when everything is fairly valued or a little bit overvalued, I want to find more of stock picking. And then for every X amount of dollars I put in a given stock, I would put a third of that or a quarter of that in an index to offset that risk, if that makes sense. So, but right now what we're seeing, and you've asked a great question, is why is there a correlation between precious metals and stocks? Usually, if stocks are hot, then people would buy stocks and would say the economy is doing very well. Why would I need to hedge anything with precious metals? And so they don't. There's a famous gold to Dow ratio, which a lot of people follow to understand what is better, stocks or precious metals. Instead of looking at the dollar terms of how much an ounce of gold is worth in US dollar, they look at how much points in the Dow they can buy with an ounce of gold, because obviously we know that about 83 fiat currencies right now, gold is already trading at an all-time high. So the US dollar is just one fiat currency. But to answer your question, I think one, the Federal Reserve, instead of being the most important player in moving markets, it since March has become the second most important. So whereas in the Greenspan years, Bernanke, Yellen, and up until March with Jerome Powell, the Federal Reserve was the most important financial institution to investors. They made decisions based off of what the Fed chairman says and does. Because of what happened in March, they had to basically pull all triggers. And they reached a situation where they're exhausted their powers, not 100%, but enough to make them now the second fiddle to Congress. So I think fiscal stimulus has now become more important than monetary stimulus. QE programs, they've, like a good, like when you enter a fine steakhouse, the first steak, you're amazed. If the chef tells you, I'll give you a second one for free, just eat it, you may eat it. The third one, even if it's free, no thanks, I'm full. And that's how QE also exhausted its power a little bit. And the world the economy will move better with targeted fiscal stimulus that go to the Main Street, not to Wall Street, and then try to trickle it down. It didn't work. It didn't work until Trump came in and then said, look, tax cuts, deregulation. He basically gave the confidence to Wall Street to get back to middle-class economy and to Main Street. But it wasn't the Fed that did that. It was more Trump's policies. And so fiscal stimulus, meaning anything that has to do with taxes, regulation, opportunity zones, tax incentives, reshoring, anything that has to do with where jobs are created, which industries the United States favors, etc., where money is being spent by the government. That's much more important in this decade we just started than what the Federal Reserve is doing, because interest rates are zero. In 2018, in December, they've tried to raise them, and they reached a point where the market said enough. 2% went to 2.25 on the Fed funds rate, and the market said, I am going to puke. And they puked 20% in one December, literally the worst December since, I believe, the Great Depression. And then the Fed did what we call now the monetary U-turn, which is to say that they paused hiking and they started to lower rates. So households, corporations, everyone now is living in this world where they function, they may be only functioning because of low to zero interest rates. So what the Fed is trying to do is to avoid a situation where there's going to be nominal negative rates in the United States because it's the world's reserve currency. But what they would like to do is kind of peg the 10-year bond to this range where if you add the CPI on top of it and you you reduce one from the other and you create what's called a real interest rate. So a 10-year bond minus CPI, you would get that negative interest rate, but it's just nominal, it's just real negative and not nominally. So the 10-year bond will float between 0.6% and 1%, still way lower than what the dividend yield of the S&P 500 and the Dow is. So people will choose not to save, but to invest, boosting the economy, which is what they want to create. They won't diminish the power of the purchasing, the power and the prestige of the US dollar to a point where there's a crisis, because they won't go to negative interest rates like in Europe or Japan or other regions. And they will create a situation where people would favor buying stocks, real estate, and hedging with gold and silver than to own just pure fiat currency and save as a big sovereign wealth funds or pension funds, etc. So that's why you're seeing this move in precious metals alongside stocks, because when you do fiscal stimulus, this creates a situation where the money goes straight to Main Street, and that does create inflationary expectations. Whereas when you put the money in rich people's hands or rich corporations' hands, this money doesn't go and buy stuff. It doesn't create velocity of money. They go out there and they buy assets. So you saw just asset inflation in the 2010s in the last decade. You didn't see Main Street inflation. perhaps you saw rents go up disproportionately in San Francisco, etc. But you haven't seen everything rising broad-based. You didn't see wages rising. You didn't see just everything noticing much more expensive to you. So, and in fact, the Fed kept complaining, we can't reach our inflation target. So I think they have that problem pretty much solved in this decade, because with a lot of fiscal stimulus, you will start seeing inflation. And that's why I believe that with the markets going higher, you will see people hedging the expensive stock market with a very simple and a very cheap hedge, which is precious metals. And, if Berkshire Hathaway would have become wise to this 20 years ago, when they had 40 or 50 or $60 billion in cash, and they would have said, let me take a quarter of this or half or a third and put in precious metals, that company would be a $1 trillion company today instead of a mere 500 billion. And they were 20 years after the fact. So I think the blind spot that people have with gold and silver has caused many people to lose a fortune, and certainly to the average person who in 1971 had the opportunity to convert fiat to precious metals at 35 an ounce, and today see it 60-fold, and doing much better than if he still has that $35 change in his pocket, which would buy him today much, much less. If I'm not mistaken, we're talking about an 85 to 90% decline in purchasing power since 1971.
Well, thank you. A very good and complete answer to my question. I appreciate that. So let's talk a little bit more about gold and silver. Where do you think we are right now in terms of the bull market for precious metals, which arguably started about a year ago? We didn't really see the full effects of it until the fuel was added to the fire with COVID, and it really started to drive a lot of investors back into precious metals, seeking safe haven and security. Where do you think we are now in the bull market for the metals, and what are your predictions, let's say, for the next 12 to 18 months for gold and silver?
Okay. So we wrote a lot about this topic at Wealth Research. I created a special report for your listeners at wealthresearch.com/gold playbook, literally about all of this topic, investing in gold, silver, and whatnot. And my answer to you is the bull market to me started, obviously, price-wise, started December 15th, 2015 with gold, bottoming out at around 1,053 an ounce. But it really got a kick in April 1st of 2018 when, of 2019, when Basel III was enacted. Because gold was $12.91 an ounce. And literally when Basel III was announced, they basically said precious metals are worth double or gold is worth double what it is right now to us, to the central banks, because it moved from a 50% collateral to 100%. And that means that at least to central banks, it's worth $2,584 an ounce, which is double, $2,582 an ounce, which is double what it was on that date. And if you look at that date, if you just plot a chart and look at Basel III announcement, 1291, you will see that actually gold has never looked back. Another key date was September of 2018, when the markets believed that the Fed will not stop to raise rates, and they really sold gold off. It bottomed out around 1180 back then, and obviously with the monetary U-turn and everything that happened after that, that was a very big bottom for gold. And so I think those two dates are very important. It also is important to mention that in a gold standard, you have a certain amount of the currency that's covered by gold. So there's a light gold standard with 20%, there's a double light with 40%, and there's the full-blown classical standard with 100%. For a few weeks in 1980, with gold at 850 an ounce, you had 100% of the currency supply backed by gold. You could have literally exchanged all the dollars for 850 an ounce of gold if it was a gold standard. So that gave you an idea of how much currency there was in 1980. To do the same thing today, you have to know that gold currently backs about 5% of the US currency supply. So to get to that 1980, 100%, you have to double the price of gold by, you have to multiply it by 20. So if it is 2,000 today, it's 40,000 an ounce to do that. Just to give people an idea of where we are compared to where we were in 1980. Because obviously the price is bigger, but there's not even a comparison in how much currency is out there. And so that's one thing to keep in mind. Gold currently just backs about 5% of the US currency supply. And to me, that means that it has a lot of upside potential, both near term and just in general, in order to cover more of the currency supply, which it ultimately it does. That's what it does. Gold comes in and out of these bull and bear markets, but the idea is in bull markets, it tries to cover as much of the currency supply as possible. And in amazing situations, it even covers 100%. So to me, gold is something that I'll always own, and I'll keep it. I won't trade it and sell it, because at 5% of the currency supply, it's literally buying gold at the cheapest you can buy it when you look at currency coverage. With silver, I think it's even more interesting, Mark, because it's 50% off of its nominal all-time high of both 1980 and 2011, which makes it very different from gold, which is right up there with its all-time high. In the Trump years, what I think happened, analyzing it backwards, is Trump, because he's so aggressive, his demeanor of running a country is like running a small business. He shoves and elbows and try to get things done. People love that, people hate that, doesn't matter. What it does, it creates this uncertainty about what he will do next. And so a lot of the big money managers, they kept a lot of cash around. And you saw that in 2018, the dollar was the best performing major asset in the world. The last time that happened was 1969, 2 years before Nixon had to take the dollar off of the gold standard. And so in the Trump years, you saw the dollar really strengthening alongside gold. And because the dollar is strengthened, silver really was not. And the gold-silver ratio reached an all-time high during the Trump administration of 123 to 1. And so silver was not a beneficiary of the Trump years. So if you look going forward at what's going to happen if Trump gets elected or Biden gets elected, one thing is, how strong will the dollar be? In both cases, because the fiscal stimulus in this decade is going to be so strong, the dollar is going to start a bear market. We have to, if you look at the dollar index, since 2011, it's been in a 9-year bull market up until March of this year. And so this was a very long, very strong bull market for the dollar compared to other fiat currencies. And I believe that is over. The average span of a dollar bull market is 8 years. So it fits right in there that we've started a dollar bear market that will probably last 5 to 6 years here. So a very weak dollar is good for silver. I like silver more than I like gold right now if I'm looking at just trading or price appreciation and such. What's also interesting is that peak gold production for the mining industry happened 3 times in the last 50 years. One was 1970, which coincided with this dollar standard removal of Nixon and this amazing 24-fold move in gold in the 70s. It happened for the second time in the year 2000. So again, peak gold alongside with a very historical important bottom for gold. The third time that miners have peaked in gold production was 2018. That year where I said the dollar was the best performing asset class. Gold bottom in September at 1180. people can look at that chart and look at that strong move down and that bottom. And it's obviously never looked back since. And by 2024, gold production is set to half of what it was in 2018. So there are many contributing factors here to why it's important. I think also Biden is actually going to be even better for silver investors because his more relaxed manner with the Chinese is going to relax people's needs to own a lot of dollars, because there's not going to be any, as much tension as there is with the Chinese under a Trump administration. And actually, in my opinion, if Biden gets elected, it's going to be better for precious metals than if Trump gets elected. So
thank you.
That's my point.
It's some great thoughts there, and your mind is obviously great with dates and history, and I think it's so beneficial for especially the younger investors to follow your work. I think they're going to be really impressed by someone your age who has so much knowledge, and it's great because you show them that it's possible. We were talking offline earlier, and you're saying, you remember when you're a little bit younger and you start speaking to investors your age and they had no clue where to start. And I think that's still the case, even with people now in their mid 30s and early 40s. They're starting to accumulate wealth, but they don't know where to start the journey. And therefore they might feel reluctant to invest the time into this undertaking, but obviously for you, it's paid off handsomely. Lior, I want to finish with one last question, a somewhat of a personal question. I like to ask my guests one personal question at the end of the interview. Of course, we'll also post the report that you wrote for SWP followers. We'll post that in the details of the interview. But I want to finish by asking you this. Really caught my attention reading your bio. You've done a lot of traveling. You've seen a lot of the world. It means you've met a lot of people. You've seen a lot of things. From all those travels, it doesn't have to be necessarily the most important lesson you've learned. Maybe that you can keep that one for yourself. But what is one of the most important lessons you've learned from all these travels, meeting all these people, that you can share with other young investors?
I need to fix the bio a little bit because I've been to 43 countries, not 30. But I think, look, at least in my life, what helped me catch lucky breaks so far has been the power of partnerships. So I've never tried to make it alone in anything. And I don't think it's really possible to really succeed by yourself. At least that's what life has shown me. Everywhere I went, where I try to be a lone wolf and do it by myself, I've not succeeded. And everywhere that I went with strong partners, I've seen much better results and success. Luckily for me, I also married very young and have enjoyed a great marriage. So in my home, in business, and I think in other parts of my life where I look for mentors, I think that is some of the best advice I can give, not just to investors, but to anyone. Leonardo da Vinci, Michelangelo, people that were sculptors and painters, even they had a lot of help. Singers, like solo singers, like Beyonce and whatnot, they have vocal coaches and people that are close to them, help them with, getting inspired to write songs and whatnot. Even the most, even tennis players that are on the court alone, you always see the entourage right there, because it's literally nothing is solo, except maybe a fighter pilot, and even he has to talk with somebody when he gets off and analyzes the flight. But the idea, Mark, is I think if you can find people that are like you and that want to do it like you, whatever you want to do, man, that is such a great advantage. And I always think about Steve Ballmer, who is, I think, the 5th or 6th richest person in the world. Nobody, half the people listening to this probably never heard him before. Maybe he bought the Clippers. But the guy was one of the first employees in Microsoft. Bill Gates loved him. And he became CEO later. And he's worth like $50 or $60 billion because of Microsoft's success. And that's a person that shows you like the power of partnership. This guy found Bill Gates, you know, a genius, maybe has eccentric views on vaccines and whatnot, but, you know, in computers and whatnot, this is the guy you want to partner with, right? So that is to me the importance of partnership. If you can find people that are like you and you can stick with them, you will have a very fortunate life, in my opinion.
Well, thank you, everybody. Meet Lior Gantz. If you're looking for someone to follow, to connect with, potentially as a mentor, especially if you're a young investor, I would recommend it. I've learned a lot from him in the short time that I've known him today, and we'll continue to follow your work now that we've connected. I want to thank you, Lior, for your time. Like I said, we'll post your details along with the video, and we'll look forward to having you back on Inside the Vault to talk more about precious metals in the stock market, maybe in a few months' time.
Thank you, sir.
All right, Lior. Thank you.